Over IRS Form 8379, Injured Spouse Allocation. So we previously recorded this video in either 2022 or early 2023, but we wanted to update this with a little bit of change to the form since the most previous update, and as an update to our article. So you can find our updated article on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 8379, and you'll see the article that reflects the most recent version of this tax form. So there are 4 parts to this tax form, and we'll go over them in a moment. But first, let's talk about what an injured spouse allocation is. So the IRS basically defines an injured spouse as someone who files a joint return, and part of, like, as a married couple, and part of one spouse's tax return refund is allocated to the other spouse's past due debt. So, for example, if John and Mary Doe are filing a joint income tax return and their refund happens to be $2,000, then if John owes past due state income tax from before when they were married, or student loan debt, or some other enforceable type of debt, which we'll get into in a moment, the IRS will naturally apply the entire tax refund to that overpayment until that debt is paid off. Now, if John's wife, Mary, says, hey, I wasn't a part of that refund belongs to me, then Mary, in this case, would be the injured spouse. As a result, you can report your income tax items such as tax withheld, credits, deductions, etc. You can complete this form. It will announce to the IRS how much of each person's tax items, or how much was reported on the original tax return, and how to allocate that between the two spouses. And then the IRS will take this under advisement as they determine how much of that refund should go to John's debt, and how much of that refund should go to Mary as the injured spouse. So it is important to note that injured spouse and innocent spouse relief are 2 different things. So there's a separate tax form, IRS Form 8857, that discusses innocent spouse relief. So in a general sense, both spouses are responsible for paying the full amount of tax, interest, and penalties on a joint return. But an innocent spouse situation may involve one spouse completely controlling the finances, not paying taxes, in a situation where the other spouse may completely trust the first spouse to do the right thing. And this happens a lot of times in abuse and related situations, where one spouse just completely controls all the finances and they decide not to pay the tax bill. And now the IRS is going to hold both spouses jointly responsible. So an innocent spouse relief form would inform the Internal Revenue Service that the injured or the innocent spouse would have done the right thing had they been in a position to either know about it or take the corrective action. So that's a completely different situation. This is the allocation of a tax refund that goes to the injured spouse that should not be going to pay a past due debt for the other spouse. So you can file this tax form either with your tax return, or you can file it later on after the return has been filed. And we'll get into specifics in a moment. So there are 4 parts to this tax form. It's a 2-page form, and we'll go through each of them step by step. But part 1 is, should you file this form? And we'll walk through the different questions and kind of discuss the different options that may be available. Part 2 is the information about the joint return for which this tax return was filed. Part 3 is the actual allocation between spouses of the items that were reported on the joint return. And then part 4 is the signature field. So let's go to part 1 and we'll break this down. So line 1, we're going to enter the tax year. So in this situation, this is John and Mary Doe. John has some past due debt. However, that debt impacted Mary's share of the tax refund. So Mary would be completing this form, or Mary and her tax return preparer. Line 2, did you file a joint return? So if you answer no, then you can't file this form because you would not be an injured spouse. So spouses filing separate returns do not get the option to file an injured spouse allocation. Let's go to step 3. Line 3, did the IRS use the joint overpayment to pay any of the following legally enforceable past due debts? So it would be federal tax, state income tax, state unemployment compensation, child support, spousal support for an ex-spouse, or a federal non-tax debt like a student loan. So if there was an offset of your federal tax, then you would receive a notice CP 49 that basically says part or all of your refund that you were expecting was going to offset a federal tax bill for a prior year. If there's a state income or unemployment compensation, all of these other different debts, those are part of the Treasury offset program. And we've put links in the article if you're interested in learning more about the Treasury offset program, and we'll put a link to the video about CP 49, which is the federal tax offset. So if you answer yes, then keep going. If not, then you're not an injured spouse. So one of the things to consider is if the past due amount is for a federal tax liability that you and your spouse owe, you might qualify for innocent spouse relief. And again, the criteria would be there's an understatement of tax, meaning you didn't report the tax properly because your spouse omitted income or claimed false deductions, and you didn't know, and you didn't have a reasonable expectation to know about the understatement. 2, if there's an understatement of tax and you're divorced, separated, or no longer living with your spouse. And then 3, given all the facts and circumstances, it would not be fair to hold you liable for the tax. Again, the IRS does take into consideration domestic abuse situations. That would be a very plausible reason why a spouse would qualify for innocent spouse relief. Line 5 talks about residents, whether or not you're a resident of a community property state. If so, there are specific rules and guidance set forth by the IRS in revenue rulings depending on which state you live in. So you can get links to all those in our article, specifically Arizona, Wisconsin, California, Idaho, Louisiana, Nevada, New Mexico, Washington, and Texas are all community property states. So in line 6, did you make and report payments such as federal income tax withholding or estimated taxes? So if you did not, then you would have to just keep going. At this point, if you are able to skip the remaining lines and go to part 2, that's great. We'll catch up with you in just a moment. So in line 7, did you have earned income such as wages, salaries? So if yes, go to line 8. If not, then skip to line 9. In line 8, did you or will you claim the earned income credit or the additional child tax credit? So if you did or you will, then you can skip line 9, go to part 2, and complete the rest of the form. If you did or you will claim a refundable tax credit, then you can complete the rest of the form. But if you made it all the way to step 9 and you're not claiming any refundable tax credits, then you're not technically an injured spouse. So in part 2, we're simply entering information about the joint return. So in line 10, we've got John and Mary Doe's name, social security numbers, and then Mary as the injured spouse has checked the box next to her name and social. In line 11, you would check this box only if you want your refund check issued in both names. If you're looking at electronic payment, this probably doesn't matter a whole lot, but if you need a check that is issued to your both of your names, then you would check that box. Otherwise, separate refunds would be issued for each spouse if applicable. And then line 12, do you want any injured spouse refund mailed to a different address? If you select yes, you can enter the address. However, if this is a permanent change, you would also want to attach IRS Form 8822, which is a change of address form, because technically this would not be a permanent change. It would not update your record. It would simply reflect where your check is mailed. But if it's just a temporary change, then you don't need to submit that form. I'll go back to line 9 just a moment to cover what the refundable tax credits are specifically from the instructions. So the IRS is looking at the American Opportunity Credit, the credit for federal tax that was paid on fuels, refundable prior year minimum tax, and then the premium tax credit. So in part 3, we're going to properly allocate what was reported in column A on the original tax return, and then we're going to allocate that to each injured spouse. We're not going to calculate how much the IRS gives back. The IRS is simply going to take this information and then come up with a determination on its own based on the numbers provided here. So first and foremost, all of the numbers in columns B and C must add up to the column A amount as reflected on the joint return. So right here, column A must equal columns B and C. So we've allocated all of these items based on John and Mary's tax return, and we'll go through step by step because there is guidance that the IRS offers on how you should allocate certain items. So in line 13, we're going to start with 13A. That's the income reported on your Form W-2. So in this case, John and Mary Doe, let's just say that they each received W-2 income and it's split down the middle. Of course, this could also be the case. Let's go ahead and change this to John being the kind of the big breadwinner and Mary having a side job, right? So this still is this will affect the calculation as to how much of the tax refund should go to Mary, obviously, because if John produced most of the income, most of the tax bill would have fallen on him, but any refund would be kind of allocated in a proportional manner. So this would be income that's included on your Form W-2. So in columns B and C, you would break that apart as reported on the W-2 form. In line 13B, you're going to enter any other income items reported on your Form 1040 or 1040 SR, lines 1B through 9. This would also include any amounts on Schedule 1, lines 1 through 10. In line 14, we're going to enter adjustments to income. So in this case, we have adjustments to income. This is on the second part of Schedule 1, lines 11 through 26. These would be things like IRA deduction, student loan interest deduction, so on and so forth. So let's just say that they split that down the middle. They each have contributed to their IRAs, and this is how it turns out. In line 15, you can either prorate your itemized deduction, or you can just split the standard deduction in half. So if you split the standard deduction in half, basically each spouse gets half of the standard deduction. For the 2023 tax year, the standard deduction, the basic deduction for each spouse or combined, $27,700. If either spouse is blind or one of them is considered elderly and is able to claim an additional deduction based on that, then that additional deduction should be allocated to the appropriate spouse. However, there is a little worksheet in the form instructions. We've included that in our article for your reference. So there's also an additional worksheet that you may need to fill if someone can claim either spouse as a dependent on their tax return. There's a video. We'll put a link to that. It's also embedded in our article. Now, if you itemize your deductions on Schedule A, then you would simply, you would have to go through your Schedule A, allocate each deduction to the appropriate spouse. So if one spouse had separate property and estate and there was state taxes allocated to that, but then everything else was a joint deduction, then you would take that into consideration. Or you can allocate other deductions as you see fit. In line 16, we're talking about non-refundable credits that would be reported on your tax return. These would be on Part 1 of Schedule 3. So in columns B and C, you would allocate any of these credits, such as the child tax credit, credit for other dependents, child and dependent care credit, or education credit, solely based on the spouse who would have claimed the qualifying child if they were filing separate returns. So you do have some room for judgment there. But in this case, let's just imagine that we split those in half. Line 17, you would include any refundable credits. They would be in Part 2 of Schedule 3, and you're going to allocate all of those credits as appropriate, just like I mentioned for line 16. The one exception is you would not include any earned income credit here because the IRS will allocate that based on each spouse's income. You can allocate business credits based on the interest that each spouse has in the business. So if one spouse owns a business, then the other spouse cannot claim the business credit associated with that business. In line 18, we're going to include other taxes. So all of these others we split in half. We get down to line 18, and this looks like it was $5,000 of taxes that were allocated to John. Let's just say that this was a self-employment tax that might have been attributable to him. Then that would not be on Mary's dime. That would be on John's. The federal tax withholding, you have some flexibility there. You should include the amount of federal income tax withheld on your joint return. This would be on either your Form 1040 line 25D or on your Schedule 3 line 11. So in columns B and C, you're going to enter the amount from each spouse's W-2, W-2G, or 1099 forms of the amounts that were actually withheld. So if you're filing Form 8379 separately, you're going to want to attach those W-2s, W-2Gs, and 1099 forms with your Form 8379. So you would also include any excess Social Security or Tier 1 Railroad Retirement Act tax that was withheld, any additional Medicare tax withholding from IRS Form 8959, again attributable to each spouse. In line 20, we're going to enter the payments that were shown on your tax return. This would be on line 10 of your Schedule 3 or line 26 of your tax return. And you can allocate this however you want as long as you both agree. If you don't agree, the IRS will calculate each spouse's separate tax liability as a prorated amount of the overall tax bill. So if two spouses had a $20,000 tax liability and the IRS determines that one spouse actually owed $15,000, the other spouse owed $5,000 of that liability, then they would apply basically 3/4 of any estimated tax payments to the first spouse and then the remaining 25% to the other spouse. So, but you can allocate this how you want as long as the two of you agree. So at the bottom, you're going to enter your signature. The IRS recommends that you provide your phone number. And again, this is only for the injured spouse. The other spouse does not need to sign this. If you have a paid preparer, then they would enter their information in this field. So you can file this electronically, but if you do mail it, then the IRS specifically has guidance about, how to file this by itself after filing your joint return on paper, or by itself after you file your original joint return. In either of those cases, you would file it with the same Internal Revenue Service Center where you either filed your return or the one that applies to where you live. If you file this with an amended return, you would do the same. If you file it with your joint return, then it would simply be attached to your joint tax return. So there are some common mistakes that the IRS points out in the form instructions, which I'll briefly go over. So if you file it separately, don't include a copy of your original return. This will kind of prevent delays in processing your allocation. But if you do file it separately, make sure you enclose copies of all your W-2, W-2G, and 1099 forms. If you file it with your tax return, make sure that you enter injured spouse in the upper left corner on page 1 of your joint return. This will flag it for the IRS to let the IRS know that you have Form 8379 and they're going to process it in a different manner. Items of income, expenses, credits, deductions, you have to allocate those to the spouse who would have entered that item on his or her separate return. So even though there's some flexibility, the IRS will use that as a default position. So make sure that when you're exercising your discretion on that, that you don't create something that that you don't create a situation that is wholly unbelievable. For example, if Mary Doe was responsible for $35,000 out of a $100,000 total income, then it probably wouldn't make sense to, apply all of the tax payments to her when, the IRS might look at that and say, hey, I think John probably had some taxes withheld on his W-2, right? So, if you zeroed this out and said, trying to game the system, and you said that, well, Mary should get all this money because Mary's the one that paid all these taxes, that might prompt the IRS to do a little bit more digging in. And that's why you also have to use your W-2 forms, right? So the IRS would sniff this out pretty quickly. However, IRS may be a little bit more forgiving if you talk about how you allocated your tax payments, since the two of you have to agree on that. And then there are other areas where there may be some wiggle room, like itemized deductions, your adjustments to income. But just make sure that if you stray too far, or if you create a situation that looks a little not plausible, the IRS is probably going to be asking some questions. And finally, the last common mistake is to make sure that the debt is something that is subject to offset. This only applies to offset situations, meaning that the Department of the Treasury or the IRS has permission to offset your tax refund and apply it to certain past due debts. So not every debt is like that, only certain debts. So we do have a link in the show notes to an article that goes into more detail about the tax refund offset program. So that's all we have for this tax form. As I mentioned, you can go step by step in our article that we've just updated, and we'll put links in the show notes to the resources we've created about the forms and schedules mentioned in this video. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, comments, or if there's another topic that you'd like to see discussed in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.